Good afternoon, traders, and welcome back to the Hot Stocks Outlook for March 29th, 2019. Hope y'all are having an excellent week out there in the financial markets, and as always, plenty of great opportunities to cover here. We're going to jump right into it. We've got American Axle and Manufacturer, Briggs and Stratton. A lot going on in automotive engine production. We can see something in Briggs and Stratton there, even down to things like the auction companies and things like that on used cars. We'll look at McCormick and Company here, so food production there, Comerica, and also HanesBrands, which we've covered over the past couple of weeks, and we'll get caught up there as well. But let's start out here with American Axle and Manufacturing, and what we have here are daily bars. So each one of these bars represents a full and complete trading day. We can see this candle going back to February 28th. Now, against that price action, you see that there is a black line and also a blue line. Now, the black line that you see on the chart, that is a regular simple moving average, one of the most common technical indicators you'll see. But the weakness in a regular moving average is that it's only looking at, well, in this case, the one market, American Axle and Manufacturing, and it's completely dependent on previous price action. So it sort of gets dragged around, but acts as a good barometer of where prices have been over a given period of time. But we need to know where prices are going. So against that black line, you also see that there's a blue line, and for that value to be generated, the VantagePoint software here is actually looking at intermarket information. So it's looking at how 30 to 35 other markets affect and influence, in this case, American Axle and Manufacturing. That can be ETFs that deal with similar stocks, similar individual companies. Things like the S&P and the broader indices are very important as well. Things like the dollar index and currencies. So this all comes into play and is then used to generate predictive data. So data in the future that has not yet occurred. And then that predictive data is built into these indicators, turning them from lagging indicators into predictive forward-looking metrics. So what we have there with that blue value, and for that value to be generated, VantagePoint is doing all of that intermarket analysis and forecasting where are average prices predicted and expected to move next. And so when we have that blue line, in this case, cross below the black line, it's signaling that prices are expected to start moving lower. Trend traders should look to, trade the trend. It's shifted. You would only want to be on the short side of this market. Now, in addition to that predicted moving average crossover, you'll see a couple other indicators on the chart here. Now, at the very bottom, there's the, you see this switches from a red to a green back to a red. This is a highly accurate 48-hour indicator. So you can think of it as looking ahead 2 trading candles at a time, and it's letting you know about short-term strength or weakness in the market. And how I really like to think about this is when this, in the case of a downtrend, the neural index gets bullish in this case, it's suggesting that prices may move above the average, right? I mean, you're going to see volatility. You should see prices move above and below the average, but the trend is very much to the downside. So that can help you know when you want to buy on dips or short on rallies. And lastly, you're given a predicted trading range. So this is actually the trading range for today, and we can see that when an actual trading day occurs, we'll see exactly how accurate that prediction was. But if I go ahead and I hit F5 on my keyboard here, we can see how accurate all of those predictions have been over the past couple of months. And you can see how, as a trader, you got to understand what direction am I trading the market? What price levels do I want to get in at? And that's where these predicted levels are ideal to not only get you into the trend early, recognize when that trend is shifted, but know intraday, where should you be looking to short the market? Where should you be looking to take intraday profits from? And that's going to make you a much more effective trader and really give you the ability, as we highlight in multiple Hot Stocks Outlooks videos, the ability to add to those positions with profits. And that's where you can really knock things out of the park on certain opportunities here. So really nice opportunity. We see that blue line still below the black line, down 15, almost 16% in just the past 19 trading days. So great opportunity to buy some put options, get short, hedge your portfolio from those previous January and February months where everything was straight up. We were only highlighting long positions in the market, but things have shifted. So looking here at Briggs and Stratton, very similar. Strong crossover to the downside, neural index here at a 0, and you see how effective these the neural index is. Very consistent, but when we get a green candle here, we're getting that price action moving higher, telling you, look, expect those higher prices, but the trend's still very much to the downside. Same thing here. Neural index moves up. You're getting that trading above the predicted moving average, but we're not getting crosses of the blue line above the black line, right? It is still a market that is in a downtrend. And lastly, we want to come in with the help of those predicted levels. And you see, okay, well, if you're shorting this market, well, you actually get filled here, you'll get filled here, you'll get filled there, you'll get order there. You see almost immediately within 2 days, you're already moving lower again. And every single day you can come in and reassess the situation. Really there's some great traders in the past. Paul Tudor Jones talks about this, is going in every single day and saying, hey, what's the best position I can get here? You see 9 entries, 10 entries to the downside here as this market moves lower and lower and lower. Let's see overall here, very nice move to the downside. And if you go back and watch these hot stocks outlooks, what you're going to see is January and February, everything getting very bullish, only highlighting these long positions. And that's how you want to use VantagePoint, buying at predicted lows and looking for new highs. But things have shifted and you got to be a little bit more nimble and hedge some of those opportunities where you may still be long trailing stop. Some things doing very well, but there's some serious weakness out there that we need to be aware of and great opportunities to short the market, make money on the downside. Here in McCormick, and we're actually, if we look broadly at just food production sort of sector, those sorts of things that you see in the grocery store, a lot of strength in that area. So you see some areas of weakness, some of those being financials and some of these automotive things, and some strength, few and far between, but here in McCormick, and also, like I mentioned, some of these broad food production sort of things, crossover to the upside. Neural index, you see strongly at a 1 here. You'll get these periods where, a couple days after that neural index goes bearish, you're getting some sideways action. But the trend's still very much to the upside. So you're set to be a long in the market. You are only looking to buy at predicted lows, possibly take some short-term profits at the predicted highs. But you see how once you set that directional bias, from taking a position, it's a day or two maximum, and you're in profit, that market's moving higher. So again, 1, 2, 3, 4, 5, 6, 7, 8 entries to the upside. Market still in a very strong uptrend. And we see over the course of this month and a half here, really nice move to the upside, almost 20%, over 18%, $23 per share. So again, a really great opportunity to, if you trade options, buy some call options and things like this. Make sure you hedge yourself, buying some puts and things like AXL or Briggs and Stratton, and you've got those adjustments in the portfolio, but based off of these highly accurate forecasts and intermarket correlations, which are critically important as we see the sectors, sort of shift and move. Some things doing well and other things doing very poorly. Again, here's Comerica. Cross to the downside very clearly here. You see you get this little bit of strength here. We are trading above that predicted moving average, but you never get that blue line crossing above the black line, and the trend's still very much to the downside. So that trend trader needs to know, look, the trend is still down. You may get a little bit of a movement higher over these trading days, but until that blue line crosses above the black line, stick with that trade, stick with that trend, and of course, use the help of your predicted levels. And so each and every day, you're not necessarily going to hit it every day, but you don't want to be shorting on this day or this day when you can get in at a better level 2 days later, or shorting on this day when, hey, you can short here, you can short here. So you don't have to chase these things. Just go ahead and make sure you get the level, and then you're getting that much more, advantageous risk reward when you actually get in and start a position at those projected levels. So again, just a fantastic opportunity here. And again, just want to highlight that we're in a different market environment than we were coming into the beginning of this year. Things are certainly shifting. You see a lot of these stocks down, 17.5% or $15 per share. And some of these things very strongly in those downtrends. So you really want to be nimble and cautious out there, because there are some areas where you're going to see the market pull back. These trends are to the downside. So certainly be aware of that and use these tools to help manage that position and adjust your trade over time. Because, when you get into the market maybe here, you're going to have a whole different reality several weeks down the road, and you got to know how to adapt to that situation and make the most of that opportunity. Lastly here, HanesBrands. We've covered this over the past couple of weeks here, and what I like to do is sometimes bring in these opportunities that we have covered previously and show you how over the past couple of weeks, if you're still trading off of those projections, you're doing quite well. Crossover to the downside, obviously the entry here we've gone over a couple times, but let's take a look at those predicted highs and lows. And you see here over the past couple of weeks, if you want to be a trader here, well, there's a great entry there. There's a great entry there. So it's really just about matching your time frame with the indicators that you want to use and understanding that, hey, if you're a day trader, you're not going to chase the market and try to short here, just short all the way up here and catch this much bigger range so you can minimize that risk or where the stop loss needs to be relative to the reward when that trade goes ahead and hits that profit target. So really great opportunity here. You see getting another big dip here in shares of HanesBrands and just increasing that opportunity value here down about 9% now, and things still in that downtrend. You see a lot of separation between that blue and black line. Neural Index saying expect some prices to move a little bit higher here, but very much still in a downtrend. So really nice opportunities all throughout the market. We've had certainly a shift in many shares, and that suggests, look, make some money to the downside of this market, hedge some of those longs you took over the past couple of months, and keep rolling this forward and making those proper adjustments with your portfolio with a tool that's actually accounting for those global intermarket relationships and how they're going to affect the stocks that you're trading. So have a great rest of the week. Thanks again. This has been our Hot Stocks Outlook for March 29th, 2019. Thanks again, and bye for now.